All right, welcome back to the stock market recap for Tuesday, June 10th. And if you just look at the indexes today, you'd think that the market had a very strong day. But that's why you tune into these recaps because we're going over much more than just the indexes. We'll take a look at the 9 liquid leaders, a daily recap of some key stocks, take a look at the ETFs for sectors and industries to take a look at where money is rotating, and then end the video with some long and short setups. So if you guys enjoy the video, please leave a like and subscribe to the channel. All right, let's jump into it. Like I said, indexes had a phenomenal day today. NASDAQ up 0.67%, bounced off the 5-day EMA, closed at a new rally high. Very, very strong action out of the indexes, a nice uptick in volume. SPY, S&P 500, also a new high for the rally, holding over that 5-day EMA. No sign of weakness here. IWO, higher highs, higher lows. We did close positive, up 0.3%, and a third close over the 200-day moving average. All constructive action. ARKK, higher highs, higher lows, up 0.9%. Some Tesla strength there, getting this to show relative strength compared to the indexes. A little bit of a gap between the 5-day moving average right now. So a pullback into that area and that gap zone would be a spot of interest. Do we get support there or do we slice through that on any pullback? And then Bitcoin using BTC for that. Very strong action, trading above all the key moving averages. Again, none of the indexes or Bitcoin is going to show any weakness. But when we take a look at the 9 liquid leaders, we are starting to see some weakness under the hood. So one thing I always look for is gap ups or gap downs. Typically that don't get filled that are the most important for me. And you'll see a lot of trends start to come under pressure when you have, if it's an uptrend, your first gap down. And if it's a downtrend, your first gap up, that downtrend comes under pressure. And we're starting to see a lot of the leaders have these unfilled gap downs, which the run that they've had, they deserve some time to rest, but we should be taking that information in, knowing that, hey, the liquid leaders are starting to chop a little bit. We're not getting the trending action that we saw the last 6, 7 weeks. So we might need to play a little bit more cautious with our trading. CrowdStrike gap down on earnings last week. We rallied up into that resistance gap after holding the 20-day moving average, but potentially this is putting in a lower high here. We've tested it now 2 separate times after the gap down. Still some sellers in that zone. As long as this holds the support gap and the 20-day moving average on a closing basis, and even the low from the gap down day on the 4th, I still think overall this is a constructive stock. We would just be pulling back into a breakout retest zone. So I don't want to get too scared about this gap down. But it's something that we've seen sellers show up twice now. We don't want to just ignore that. Palantir has one very small gap down today. Great relative strength, up 0.6%, trading above all the key moving averages. Overall, not doing anything wrong, but we do have a resistance gap to work through. Actually, let me jump back to that. I want to highlight this candle where we had an ugly close on volume under the 20-day moving average, and then we gapped up the next day and closed well back through those key moving averages as well. Many times you see leaders have this kind of shakeout action where you close under the 20-day moving average on high volume and you follow it up with a gap up. And when you get that, that's a potential entry point versus that low. And we'll get to that in our watch list, in our long watch list later in the video. Roblox had a gap down yesterday, rallied up into that area and rejected there. End of the day, up 0.3%. Overall, has been a monster stock. So again, it does deserve some time to rest. I'll be watching this for a pullback into the 20-day moving average as it comes up into this gap zone at 87.40 as a potential add spot. Carvana, no gap downs, which is good. We've had a pullback to the 10-day EMA the last 2 days, held the support gap both days. This stock is still acting strong. I don't see anything wrong about it. ZS pulling back into the 5-day EMA and support gap. This is one of the leaders of the cybersecurity space, which has been a leading group at least. So I'd love if we just kind of chop here and hold this support gap. If the market does come under pressure, a pullback into the 10-day moving average would be perfectly fine. At this point, I don't want to close under the HVC or the 20-day moving average on any distribution, but some kind of chop here, allowing those moving averages to catch up. Again, perfectly healthy. Robinhood, I put this trade on yesterday as it gapped down on the S&P inclusion snub. It came under the 10-day moving average into the support gap. I built the position as it came back through the support gap high. I was hoping for a little bit better action today, but overall, not terrible. We did test the gap down zone, so now I call it a resistance gap because it's been tested with intraday action. We have proof that there are sellers still at that area. Just given what we're seeing in the market with all the failed breakouts and some chop here, I wouldn't be surprised if this pulls back into the support gap. And if it does that in a couple of days, we get a 20-day EMA test with that. That would be a really interesting spot to build more exposure onto. Netflix had an unfilled gap down yesterday, closing under the 5-day moving average. Today, we opened on the high, closed kind of mid-range after shaking out the 20-day moving average. We did bounce at the support gap. So again, this is why I always draw these on my charts. And I keep alerts around there because they do tend to give you those low risk entry points. This is 3 days in a row now that Netflix is open on the high, and then closed red. So just a little bit of risk off behavior from another liquid leader. GEV, this started stalling last week. It made new highs on June 3rd, but didn't really get going after making new highs, which is always a sign that maybe this uptrend is going to come under pressure here. We lost the 5-day moving average yesterday, opening on the high, closing on the low. Today, we opened on the high, closed near the low, into the support gap area after bouncing at the 20-day. I don't really want to close under the 20-day, but if we do, a unfilled gap up would reignite this. So that's what I would be watching for. If we kind of chop here and then retest the support gap as the 20-day moving average is up there, that's another spot to play that. CRWV, I think this looks more bullish than bearish. There's two gap down zones, but the fact that we're holding the 5-day moving average on a closing basis, the fact that we had lower volume today, and the fact that it was a stronger closing range makes me think that this has another leg higher. I would be cautious trying to short this until we get a true blow off top. For me, if we close under the 5-day and kind of get into this 10-day moving average, this needs just more time to consolidate. But the way this is set up, continuing to close over the 5-day moving average, the lower volume, lower volume as we continue to get those tighter closes. As long as the market kind of stays intact and doesn't completely fall apart the next 2 days, I think this has probably another leg higher. Okay, so now we'll go into the daily recap. This is just some key stocks that made moves that I wanted to cover. First group is quantum names, had some relative weakness today. We'll start with QUBT because this is a stock that I shorted. Still have a few shares short, but covered most of it into the close. Had been a monster stock. It was one of the quantum names that went from 73 cents to $25 in December last year. Came all the way back down to the $4 range. Never closed under the 200-day moving average, and then has since built a pretty nice pattern here. We just got a little extended intraday. And what I saw here is we uppercut the resistance gap. I got an alert on it. Actually didn't trade this the first time through. We'll go to the 5-minute chart. Got an alert on it as it was uppercutting the resistance gap high. Saw some weakness in an immediate response to that area. So whenever there's an immediate response to an area that I think sellers should show up at, that's a spot that if we get back to that area, and say I missed it, which I did this time, then we can trigger a short setup. And we got that. We uppercut the high just by a couple cents and again immediately responded with sellers showing up. I just took it when we broke under that 5-minute low, and then we lost the VWAP and then basically sold off all day. I closed most of the position into the end of the day. Still think this is a strong market given what we've seen in the indexes that I don't want to hold too much exposure overnight until we see like a true breakdown in the market. But very weak closing range after that uppercut and fail. RGTI had this resistance gap, put in a lower high, lost the 5 and the 10-day moving average, bear flag, lost the 20-day moving average, and is now putting in another bear flag. So some weakness there. IONQ rallied up into that resistance gap from the highs after the gap down in January. Yeah, January 8th. Attempted to get through that, couldn't quite do it. Had an ugly bar on the 29th, followed it up with a gap down. And we've tested this now 3 different days and can't close into this resistance gap. So this is clear evidence that there's sellers at this area uh, taking profits or just cutting losses when they can here. So just not great action. If we can close above that, then I would be impressed, and this setup gets really juicy. But until we have proof that those sellers are done, which would we would get with a close over that range, I'm still going to be pretty cautious. QBTS, I got stopped out of this today. I tried a position yesterday off the 5-day moving average, pretty small. I was hoping that it would get going, and it kind of did this morning, but we came right up into the highs and got rejected there. Took it for a 2% loss, and we closed under the 5 and the 10-day moving average. So we have the HVC, we have the 20-day EMA, and the pullback low is all kind of key spots to watch at that $15 range. Close under 15, and then this could be in trouble. But as long as we're above $15, I would assume that this is going to just tighten up and get going again. There's still some fallout between the Tesla and or Elon and Trump argument. It seems like Elon's backpedaling on everything he said, and Tesla's stock price is showing that. We had that big distribution day on when was that? Was that last Thursday? Down 14%. Good gap up on the Friday, ending the day up 3.6%. Great action on Monday. We undercut that gap low, support gap low, recaptured the 200-day moving average. And today we had more follow through, closing above Thursday's high, above all the key moving averages, and into this resistance gap. So, as Elon comes back into favor a little bit, you would expect their competitors to see some distribution. And that's what we're seeing. Rocket Lab rallied up into this resistance gap earlier before the argument, got rejected, pulled into the 20-day moving average, rallied again, got rejected again. Today down 8.3% back under the 5 and 10-day. We'll see if this support gap and 20-day holds as a potential high or low there. ASTS, though, continues to show great relative strength, and I need to get a position in this. This was a stock that had a massive move from $2 up to $38, based for 10 months. Great shakeout. I say this every day. I took this off my watch list on the 30th. And of course, that was the day where it bottomed. And since bottoming there, it's turned with so much velocity and so much volume that you should not be ignoring this name. I'll be watching a pullback in the 5-day moving average and this gap zone to build a position and just manage that against the 10-day EMA and $30 round number. Uber, this attempted to rally today, uppercut the high of the resistance gap. Seller showed up, sold off, came back down, undercut the low of the support gap and the 5 to 10, the 20-day moving average, bounced there a little bit. Um, this is still a stock that I have a lot of focus on. We've basically just done a breakout retest. We've bounced off that retest. And now if we can come in for a higher low at this gap zone at 84.60, that's a spot that I would be interested in. Wanted to cover nuclear stocks because I was so bullish them yesterday, and today we got some distribution in them. SMR, great morning. It was up like 8% at one point, new highs, but then we reversed. At one point, we were down like 3%, bounced at the 5-day moving average. End of the day, down 1.8%, still above the 5-day moving average. Not horrible, but you don't want to see like a breakout fail like that after this volatility. You ideally would have seen some follow through there. This is one where if the market gets turbulent, we've now have the 20-day catching up to the lows of the pullback and the HVC. That would be a spot that would really interest me. OKLO down 3.4%, another name that tried to get going, had some distribution, but still closed over the 5-day moving average, not doing anything wrong. That HVC 10-day moving average is the spot to watch for me. And then CCJ had the highest volume in over a year yesterday, strong closing range, but we gapped down and just sold off down to the 5-day moving average all day, down 4.6%. So just not ideal action out of that group today. Doesn't mean that the group is toast, but um, just kind of something to watch for. Semis, on the other hand, continue to be very, very strong. My position in NVTS is continues to reward me, up 10.8% today. I did sell a quarter of it at 850, which hindsight looks amazing. I kind of felt bad about selling at that point because it was rocketing pretty well, but just wanted to take some of that exposure off. I bought on the opening range break through 650 area, so that was a nice little spot to take profit at. But overall, acting great. AMSC, this is a stock that I had ignored for a long time, but it has gone on a massive run from $14 to $34. You've got this double bottom base. I'm looking for a pullback into the 10-day moving average and this gap zone on any market turbulence as a potential entry point on this one. But another semi that's working well. NVIDIA up 0.9% today, came into the 5-day moving average and bounced at that area. You've got plenty of gap up zones, unfilled gap ups, showing that this is being accumulated as we got through the 200-day moving average. A lot of spots of interest there on pullbacks. And then AVGO, inside day today, held the support gap once again. Overall, just a breakout retest after a gap down on earnings. So ideally, we hold the support gap, but even a pullback to the 20-day moving average, or even just like a pure breakout retest of this gap zone at 230 would be fine. And then the last section of this is just some weaker names. I wanted to cover either stocks that ran into resistance or had failed breakouts. FROG, this was a name a lot of people on Twitter were talking about. Looked really good, kind of tightening up at the 10-day. Had a kind of oops reversal on June 2nd. Had a nice move up 4%, but since then pulled back and is starting to look like a breakout failure. SFM, this is Sprouts Farmers Market where I get my groceries. Monster stock went from $30 up to $170 in the last couple of years. Put in this nice base and attempted to break out last week on June 2nd, but since then we've had 3 gap downs, unfilled gap downs. We've lost the 5, the 10, the 20-day, and now the 50-day moving average. Starting to look like a breakout failure. If we can rally and then see a lower high and actually follow through to the downside, this could be a stage 3 top after a massive run, and that could be a potential short on the way down. Let me jump to Abercrombie just because that's a stock that had a similar massive run up, similar late stage base. Instead of breaking out, it actually broke to the downside on big volume, and that triggered a massive move down. So it's not quite the same as SFM, but similar structure. So I'm just watching if we get more distribution there. Dutch Bros, I have one right outside of my apartment. It's always super busy. So this is a stock that I continue to watch for spots to get in. But we had this uppercut and failure of 2 resistance gaps on June 5th. Cannot close above that range the next 2 days. Today we uppercut the high of that gap zone by just a couple cents, and then we saw a big larger volume than yesterday's sell-off, down 4.2% into the 20-day moving average. Just more signs of some weakness under the hood. RBRK, this was a leader in the market, IPO leader in software, had a frozen rope where it basically trended above the 5-day moving average this entire time until earnings. Earnings, we gapped up, but then sold off in the 5-day. And since then, we've had 2 unfilled gap downs on pretty big volume, closing under the 20-day moving average. This is one that it probably needs time to just set up like a whole nother base here before it gets going again, but not ideal to see that. BTSG, another name that people on Twitter were talking about for good reason, had a nice rally from 15 to 24, got nice and tight, but rallied over this resistance gap. We actually gapped over it, attempted to rally to new highs, closed weak, and then followed through down today, all the way down to the 50-day moving average. So not clean action there. And then yesterday on our short report or our short watch list was RR. This is one of the robotic names that just couldn't quite get going with the rest of the group. Resistance at this resistance gap, 5 different times tried to get through, failed. Volume picked up as we churned, which is usually not a good sign. And then today we broke down to the downside, down 7.8% through the key moving averages on larger volume than yesterday. So indexes look great, individual stocks and leaders giving you some reasons to pause. ETFs, only a couple I wanted to go over. ITB, this is the home builder ETF. Actually, some good action. 3 unfilled gap up. Um, Closed over the 50-day moving average. Strong close today on big volume. That's nice to see. Semiconductor ETF, SMH, finally closed over the gap zone from DeepSeek. So that's very, very good sign. I don't love that TAN, the solar ETF, is starting to lead. Whenever you get solar stocks leading, that tends to be the end of a rally. So hopefully we see some distribution there. And then just wanted to highlight ITA, which is the aerospace and defense ETF. That was having a frozen rope similar to RBRK. Today we had an unfilled gap down, closed under the 5-day, right at the 10-day moving average on some volume. And then NLR, the nuclear ETF, just some weakness, closed at the 5-day, still above the 10-day in this gap zone. That's kind of my line in the sand before it needs more time to base. Next, we could get into the long setups. Let me switch this around so we can see actually the industry. And we'll sort by industry there. Coin, we've talked about how strong Bitcoin has been. This had a big move on the 13th, even more volume on the 16th. Since then, we've closed under this, so that's definitely a knock against the setup. But like other market leaders, we see this ugly close at the 20-day EMA, followed by a gap up on the 6th, which is strong action. We had another gap up on the 9th and basically came into that area today. I want to buy this on weakness just because we are under that HVC area. So I don't want to be buying and then only have like a percent or two before there's some potential distribution at that area. So a pullback into the 20-day EMA or undercutting this gap low at 244-ish, and then reclaiming that, that would be my buy point versus the low of the pullback. If that happens, who knows, but that's where I'm looking. Robinhood, the support gap low, 20-day EMA in a couple days, that would be the key spot. We already covered that. NRG, this is why I wanted to cover the ugly close under the 20-day on volume, because this is a stock that has had a massive move, 83 up to 150. Very strong reaction on earnings. Went sideways. I was staying patient, never got my foot in this stock. Now we have an ugly close under the 20-day moving average. Under the HVC, this is shaking a lot of people out. Anyone that uses the 10-day stopped out. Anyone that used the 20-day stopped out. Anyone that uses the HVC as their stopped out. So now that we've cleared the deck, if we get a unfilled gap up, that would be an entry point versus today's low. And everyone who's gotten stopped out the last 2 days would have to rebuy it. Now, if we gap down and we just continue to sell off, that's not a stock that I'm interested in. But I've seen this pattern enough where we get an ugly close under the 20-day, followed by an unfilled gap up that reignites the rally on a leading stock. So we'll keep an eye on that. AMSC, we said just a pullback into this gap zone, the 10-day moving average. That's the spot to watch. Spotify, today was probably the buy point on that. We sold off, undercut the support gap, undercut the 10-day, sold off into the support gap just above the 20-day moving average. A retest of that area is going to be my buy point, but I would want to see an undercut of the 20 and a recapture of that area before getting in. Uber, we covered looking at 84.75 area, this gap zone for a higher low after that breakout retest. GEV, 20-day EMA shakeout. That's the spot to watch. NBIS, new highs since being relisted. Very strong action. Two spots to watch is the 5-day EMA and support gap on a pullback, or the HVC 10-day EMA if the market does come under some pressure over the next couple of days. Snowflake, this has been on the watch list for a long time. We're staying patient with it. Pull back into the 20-day moving average, the $200 range, and the 20-day, excuse me, 20-day exponential moving average would be the buy point versus just the second day's low at 197.50. CRWV, I think it's viable on a gap up, or if we take out today's high. The thing with this is it's very, very powerful, but it's going to be volatile at this point. Because we have two gap downs, I don't want to be buying this on weakness. I want to be buying this on strength as we lead into a blow off top for more of like a day trade or 1 to 2 day swing trade. Once we get that final move up, I think it's going to be a great parabolic short at some point, but I don't think we're quite there yet. Now, if we get a gap down, then there's more evidence, and I just want to stay away from the stock if we get a gap down. WPM, this is a precious metals stock pulling back into the breakout zone. You got the 20-day moving average and support gap. Undercut and reclaim of that area would be my buy point. NVIDIA, we got the 10-day moving average and a support gap at 139.80. That's a spot to watch. Market comes under true distribution. The 20-day also has another support gap area. So it's a liquid stock that's obviously being accumulated with all those gap up zones. So any pullback there, I expect to be supported. AVGO through today's high, through the 10-day moving average on strength is buyable. If we lose the support gap, I would kind of want to see an undercut of the 20-day just because we do have this gap down from earnings. So want to try to get this on strength versus weakness. CrowdStrike, 20-day moving average and support gap undercut. That's the entry there. SMCI, I know a lot of people are just going to shake their head at this, but we're starting to see a lot of rotation into semiconductors. This is a stock that it moves at the end of of when a rally happens. We've tightened up. We've got the 20-day moving average under us, the 10 and the 5 right under today's low. This is one that I'd try to buy on strength versus weakness. Just break over today's high, stop at today's low, and try to play it for a performance booster to see if money is truly flowing into all things semi again. This is a name that's probably been ignored for good reason for a while, and now we've got a tight area to manage risk against. Then last stock on the long side, AS. I do have a position in this, bought this today on the open, and basically held the HVC, held the 5-day moving average. We closed above the last resistance gap. We still have a gap down zone, but we haven't quite tested that. This high is just a little bit below it. Hard to see on the chart. But IPO flagging out at the 10-day moving average. Very tight closes for a couple of these days. From those tight closes, we're going to see volatility pick up, whether it's to the upside or the downside. I'm not sure. I think this could be a little bit like BSTG, where it's a thinner traded name. We've got these tight closes. It's a very common flag pattern. If we break to the upside, I'm immediately putting my stop like near my entry point because I don't want to see a breakout come back in because we can see a really large malfunction bar based on where we are in the market, based on what we're seeing with some individual stocks. So not one that I'm going to be trying to add on weakness. I'm already in the position. It's a 5% position though. I'd probably add through today's high, try to play that for a breakout there. Short setups, QUBT, I think today was the true short entry on that uppercut and fail of the resistance gap. Now I would look for like an intraday rally that loses the VWAP as a potential short and spot a lower high in the area, and then you could use today's high as your stop. MMYT, this has been on the short report for a while. Monster move up from $23 up to $120, so a 5x there. We're looking at a stage 3 top. We've seen a malfunction bar, resistance gap, lost the 200-day moving average. And now if we lose this support gap on a closing basis, I think this goes into stage 4 for the decline. CEP, I still have a few shares short in this. Basically a nothing day, down 2.5%, closed under the 20-day moving average. This is one where it's going to break very quickly to one side or the other. Which side it's going to break to, I'm not sure. Uh, don't want to be fighting any strength on this. If it does break to the upside and I'm short, I will be out of this right away. But if we break and close under this support gap here, very likely we test the 50-day moving average in a day or two. HIMS, I did a full video on breaking down how to draw the gap zones for this, and it's been a perfect example of why drawing resistance and support gaps are so important. So I'll link that in the description so you guys can take a look at that. But again, we're just failing at this resistance gap. Every time we try to rally through it, by the end of the day, sellers are showing up and we're closing below. So institutions are selling the stock at this zone. There's no doubt about it. There's still sellers present here. Now, if we get a close above this, this setup gets really interesting very quickly. So I don't want to be shorting on weakness. Sorry, I don't want to be shorting on true strength. What I'd look for is an uppercut of the resistance gap and then a loss of intraday VWAP and short on that weakness as it's starting to roll over. And then I would look to cover some, if not all, at the support gap under the 20-day moving average because we've seen that get supported multiple times. A close under there, and then things get pretty sketchy. SERV, this is just a speculative name that has run from $4.70 back up to $14. Hit this resistance gap, sold off that day, rallied, put in a lower high, and then the true trigger was through today's low at the 5-day moving average. I didn't take this one today. So I'll just be looking for kind of like an intraday rally around that zone and then a loss of VWAP as a short versus today's high. Overall, I think like this stock has kind of made its move. Typically, when you fail at a gap zone and you put in a lower high at that same gap zone, that's when the trend starts to switch. But again, nothing is absolute in trading, and that's why we have stop losses. WGS, this has been on the short watch list for a while. Big gap down on earnings, rallied through the 200-day moving average, got all the moving averages nice and coiled. We lost them on the 5th, kind of rallied up today and failed, and then closed down, 4%. Through today's low is the short, and then have whatever you feel comfortable with risk. I'll probably use like a 2 or 3% stop there. QMCO, this is one of those other quantum related names that's always on the short report, has not responded like the other quantum names. And if we break through $10, there is no support until until $3. So we'll see how this responds. I'm looking for a break under today's low as a potential entry for the short and just use the 10-day moving average and the highs of the last 2 days as my stop for QMCO. All right, that's going to be the trading recap for Tuesday, June 10th. Like I said earlier, indexes looked great under the hood, a little bit more reasons to be cautious. So we'll see if we just get a 1 or 2 day shakeout and then things start to improve again, or if this is a start of a more reasonable pullback. The indexes and the leaders have made massive moves higher. It would make sense for some chop and some pullback here. All right, hope you guys enjoyed the video. I'll see you guys tomorrow.